Wouldn't we all like to have anticipated best-selling books, right? No babies were harmed in the making of this video. And anyone's gonna be like, oh yeah, well that's an anticipated bestseller, take all my money. Hello, I am Madeline James, and today I wanted to talk about a very interesting lawsuit that's going on right now if you have not already heard of it. This lawsuit is the DOJ versus Bertelsmann / Penguin Random House in their merger of trying to buy Simon & Schuster. And this is essentially an antitrust lawsuit, so the DOJ is basically arguing that by allowing this merger to happen, this acquisition, that there would be enough of an impact on authors, mainly like top 10%, top 1%, like best-selling authors, the fancy authors, right? The people we all want to be. But that it'll have a big enough impact on them due to lack of competition and stuff that it would be like detrimental to their careers in the industry and stuff. And what's happening with this is, in order to make those claims, they're doing a lot of statistics and research and analytics on publishing and publishing deals and auctions and stuff like that. And there's been a lot of going into the different aspects of publishing and how publishing works and how acquisitions works and how determining how much money an author gets works. You know, it may be, assuming I get into publishing, like it could be 5 to 10 years before I have a publishing deal, and at that point the industry might be an entirely different place, especially if, you know, the merger like this happens, if it does have a big impact. And it's an interesting thing to think about, and I haven't seen too much about it so far, so I don't know, I thought it'd be fun to chat about. So I'm going to pull up all the references I found, and I'm going to kind of go through what I think is interesting, and I'll link everything below, and yeah, so let's start going through stuff. Okay, so the first document that I have up here that I found filed is the United States PreTrial Brief. So this is the document submitted by the DOJ side of this on basically what their argument is going into court and what case they're making. So I kind of went through this, and I will add a bit of clarification here that I was originally intending to be a lawyer, and so I've done a lot of work at like law firms and a courthouse, and a 56-page legal document is not overwhelming to me, but I will say this is not hard to read. At least I don't think it is. Like, you can kind of sift through for the interesting stuff. So if you want to read this whole thing, I will have where I found it linked below. I'm gonna read through the introduction here from this pretrial brief, because just for context, if you haven't heard about this trial yet. So introduction. Penguin Random House's proposed acquisition of Simon & Schuster would further entrench the largest publishing giant in the United States and the world, and give the merged company control of nearly half of the market to acquire anticipated top-selling books from authors. Penguin Random House admits that the merger would cement PRH, Penguin Random House, as number one in the US and strengthen the oligopoly of the larger publishing houses. Indeed, the post-merger combined Penguin Random House, Simon & Schuster would share control of 90% of the relevant market with just 3 other companies. The evidence will show that the proposed merger would likely result in authors of anticipated top-selling books receiving smaller advances, meaning authors who labor for years over their manuscripts will be paid less for their efforts, and fewer authors will be able to earn a living from writing. And I think this is a big thing that, following all sorts of just information about what the publishing industry is like right now, I don't think people would argue that authors make a lot of money. Like, there's very few authors that I've seen, and like the studies that I've seen released and people talking about it, that can earn enough to actually support a full-time income. There's tons of videos about this, just, you know, you can find information on that anywhere. But also, having already seen some of this trial, the concept of anticipated top-selling books is a very big point of contention in this trial, and whether or not that's a real thing. And I find that very interesting, because wouldn't we all like to have anticipated best-selling books, right? If allowed to proceed, the proposed transaction would eliminate competition between 2 of the last remaining major publishers. Penguin Random House and Simon & Schuster are legendary businesses responsible for publishing some of the most esteemed works of fiction and non-fiction in the country's history. Today, they compete fiercely to win the rights to publish anticipated top-selling books. The evidence will show that many authors have benefited from this competition, which would disappear if the proposed merger were allowed to proceed, likely leading to lower advances and worse contract terms for authors. And again, this is the DOJ's argument in this antitrust lawsuit. This is not what the defendants are saying. The late Simon & Schuster CEO, Carolyn Reedy, described the Big Five as one another's biggest competitors, in contrast to smaller publishers, which she characterized as farm teams for authors who then want to move to a larger, more financially stable major publisher. The Big Five make up 90% of the relevant market because they are the only firms with the capital, reputations, editorial capacity, marketing, publicity, sales, and distribution resources to regularly acquire anticipated top-selling books. So that's the interesting part from the introduction there. Okay, so then getting into the factual background, the parties. So I am sure if you are watching this, you're already familiar with who the Big Five are, but I'll kind of read this anyway. The parties being Penguin Random House. PRH is the largest trade book publisher worldwide in the United States. PRH publishes over 2,000 new titles every year in the US. Its 2020 US net sales surpassed $2.6 billion. Simon & Schuster, S&S, also headquartered in New York. New York is the fourth largest book publisher in the United States as measured by total sales. Publishes over 1,000 new titles annually in the US. The sales records are redacted. They're blacked out. I'm going to use the word redacted. I can't remember if that's the right word for that or not. PRH and S&S are two of what the industry refers to as the Big Five U.S. publishers and account for over 90% of the market for the acquisition of publishing rights to anticipated top-selling books. Which is kind of a lot. It's not surprising, though. Like, we'll get into what they define as an anticipated top-selling book. Also, if you can hear my child screaming, she is being watched right now. I am not ignoring a screaming child to film this video, I promise. No babies were harmed in the making of this video. So this is a section for how a manuscript is acquired and published. In an effort to secure the best outcome for their clients, literary agents frequently submit proposals to imprints at some or all of the Big Five publishers, especially for books that are expected to sell well. Authors are primarily compensated through an advance against royalties. Over time, if a book earns out by earning royalties equal to the amount of the initial advance, the author receives additional payments from further sales as periodic royalty accountings. And this is something I've seen a lot recently. This is something that Alexa Dunn, who's another author tuber that's actually an author, right? She's a traditionally published author, and she talks about what that difference is there. I think there's a lot of misconceptions out there about what the significance of an advance over royalties are. Which is kind of backed up by this next section, which says, publishers determine how much to offer for an author's work, namely the size of the advance, by putting together projected profit and loss statements known as P&Ls for the work. These P&Ls include the expected list price for the book in various formats, production and marketing costs, and the key factor, anticipated sales based on previous sales of comparative titles, referred to as comp titles or comps. Comp titles are those with similar characteristics to the proposed books, such as the subject matter, literary merit, and author background. Publishers consider these the best estimates of a new book's projected sales and use the commercial success of comp titles to help determine how much to offer for an author's work. More than 85% of author contracts for anticipated top-selling books never earn out their advance, even several years after publication. Thus, the amount of the advance is all the more important because the vast majority of authors never receive royalties beyond the amount of the initial advance. And again, that context of the top-selling books is important here because these are authors that got really large advances. So I think the norm right now, I've seen numbers around like 20,000, 30,000, 40,000, 50,000 as being like a good advance for, I guess, a mid-list author. So I imagine that with those lower advances, it would be easier to earn out your advance and make royalties. But obviously, if you get a really, really large advance, it's going to be a lot harder to earn them out. There's a whole section that's redacted there. The Big Five control over 90% of the market for anticipated top-selling books. Practical indicia establish the authors of anticipated top-selling books are unique customers with unique needs. And this section is basically them saying that an author that has an anticipated top-selling book, that you're really limited to those Big Five publishers. And those authors really aren't going to go to a smaller publisher. Like, they just don't have the capital or ability or contacts or anything to be able to compete because they don't have what fits the unique needs, as a quote, PRH executives likewise recognize that large publishers are our main competitors, and for higher level advances, smaller publishers tend not to compete. So the next section is authors of anticipated top-selling books can be targeted by publishers. So this is, I think, sort of saying that when publishers identify the members of the targeted group of sellers, when they identify them by doing their P&L analysis for each book, they're determining these people have anticipated top-selling books. And because they have anticipated top-selling books, the only competition for them is in the big five, and smaller publishers are not really going to be able to play. So the competition is really limited, so then they can offer less because they're going to go with the big five, because those are the only publishers that can help a anticipated top-selling book reach its full potential, I guess, is sort of the argument here. So they can pay a top-selling author less because there's so little competition. Okay, here we go. An advance level of $250,000 is an appropriate way to identify targeted authors of anticipated top-selling books. And they go into like what allows them to make that distinction based off financial things and judgments by the Supreme Court and all that, but there is a statement here, as Dr. Hill explains, I don't remember who Dr. Hill is, there is consistent evidence that publishers offer large advances for books that are expected to sell more copies. This means that a book that is awarded a large advance is very likely to have large anticipated sales. These big publishers, like, they can push a book and make it successful. Like, you can have two books that are equally good, and if they put more money in this one, there's a much higher chance that that book will break out, you know? To continue this, data shows that the competitive landscape is very different for advances over $250,000 than it is for advances below that threshold. Dr. Hill finds that the Big Five have a 90% share of advances over $250,000. Say you really can identify books that are anticipated bestsellers and they can like really clearly anticipate that. They're almost all going to Big Five, which sort of makes sense, sort of makes me wonder, like, are they anticipated bestsellers because top five are interested in them, or you know what I mean? Like, so SSNRP is significant and non-transitory reduction in price. So significant non-transitory reduction in price. I think they're saying that this is basically just saying that based off their analysis, they don't think that if Big Five offered smaller advances that they would switch to self-publishing, which I mean is probably true in my, oh so knowledgeable and professional opinion. A lot of this section is redacted. So they talk about previous mergers. One of the things Dr. Hill will testify that the merger between Penguin and Random House, which is one of the recent mergers that happened, I think in 2013, that led to lower compensation for authors of anticipated top-selling books. So that's one of the other things they're using as a foundation. Did I have anything else interesting in here? No. Okay, so that was everything I saw in the pretrial brief on the United States side. So let me pull up, close that one. Yes, we'll save changes, all my highlighting. Okay, the next document I have is the defendant's pretrial brief. So basically this is their defense argument and the basis for it. And again, it's just so interesting, all the stuff that's in here. Their main arguments based off the sections of this, right? There's literally a section called, like, there's the introduction, factual background, and then the argument, and then all the sub parts of their argument. And some of the arguments is that $250,000 plus price segment is not a cognizable product market. So they have a few arguments that it's like you can't really make this differentiation between books that get $250,000 advances from other ones. And then they're arguing that there wouldn't be substantial harm due to this in that specific category, and the government will not provide an increased likelihood of coordination after the merger. And then their conclusion. So those are the main sections of their argument. So let me take some time to go through this, highlight the stuff that I find interesting, then I will come back and share. Okay, so to go through the defendant's pretrial brief here, and this is Bertelsmann, Penguin Random House side, and Simon & Schuster for the merger. So let me go down to my first highlighted section. Okay, so we're in the introduction. So this is kind of the introduction of the argument. I'm just going to mostly read this, pieces of it. Publishers of all sizes compete to acquire and sell books of all kinds at all advanced levels. To be sure, the largest publishers predictably acquire more books at all advanced levels, including the highest, but smaller publishers acquire books at all levels as well. Collectively, in fact, smaller publishers, which include elite publishers like Norton and Scholastic and global giants like Amazon and Disney, outpace one or more of the largest publishers in acquisitions every year. Slice and dice the market any way you want, and you will find vigorous competition to acquire books, especially books that one or more publishers believe are most likely to succeed with consumers. And I have seen a lot of things about them talking about Amazon and the threat to the publishing industry as it currently stands from things like Amazon. So I'm very curious to get into that part of things said at the trial. But okay, so moving forward, and I'm just reading little chunks here. This is not all like following right after. The merger at issue in this case will encourage even more competition and growth in the U.S. publishing industry. And this is one of their big arguments, that like this is going to be even better. So Viacom CBS's sale of S&S created an opportunity for Penguin Random House to compete better in hotly competitive consumer markets where large rivals are expanding and, to an even greater extent, smaller competitors and entirely new publishers are rapidly gaining share. And so part of this distinction they have is that there is the market of selling to readers and the market of acquiring books. So they're saying that this is going to allow them to compete better in downstream markets, which is selling, and which will allow them to compete better in upstream markets, which is buying books. I believe that's the distinction. PRH recognized that if it combined S&S's high-quality assets with PRH's premier logistics, PRH could expand distribution of S&S titles to the benefit of authors and consumers alike, while also improving PRH's ability to compete against its many book-selling rivals. So they're saying it's a win-win. If anything, by making the combined entity a stronger book-selling competitor, the merger will incentivize other publishers to compete even harder for consumer attention. Not sure if I buy that. I don't really know. Unable to prove any downstream harm to consumers, the government has instead sought to focus solely on the merger's alleged effects in the upstream market to acquire the books that publishers compete to sell downstream, but they're not actually going into the downstream stuff and the actual harm to the upstream market is kind of what they're saying there. The government instead has narrowed its focus down to one very small segment of the market to acquire U.S. book rights. The set of about 1,200 books, that's not very many, acquired annually for advances of at least $250,000, or about 2% of all books published by commercial publishers. That is interesting, that 98% of books acquired get advances under $250,000. It's not surprising, but it's an interesting number. The government treats this tiny price segment as a sub-market and gives it a label, the market for the rights to anticipated top-selling books, that is entirely unknown to industry participants. Basically, that's not a real market subset, is what they're saying. Based on the best available data, the type of transaction modeled by the government accounts for only approximately 85 books acquired annually out of more than 55,000 total books published annually, and out of approximately 1,200 books acquired annually for advances of $250,000 or more. So they're saying the advance for each unique book is driven primarily by how particular editors perceive that book's potential success, and different editors have different expectations for any given book. The wide variation in advances that inevitably result is, if anything, the opposite of a clear market-defined product categorization. I definitely buy that. Okay, and then their closing statement of their introduction is, the merger between PRH and S&S will not substantially lessen competition either in the market to acquire U.S. book rights or in the small segment of the market involving books that ultimately yield advances of $250,000 or more. The merger instead will enhance competition by creating efficiencies that will enable the combined entity to make better offers to more authors, especially for those books most likely to succeed with consumers. And by making the combined entity a stronger competitor downstream, it will incentivize other publishers to compete harder to acquire the books they, too, need to win sales among consumers. Blocking this merger would harm authors and consumers alike. The government's effort to enjoin the merger should be denied. it's, clearly the opposite of the claim of the government. I do not currently have an opinion on which one I agree with, but I'm enjoying learning. So going into their factual background, which is pretty cool. I have a lot highlighted here. Mostly just numbers that I think are interesting. I'm sure there's other ways to get these numbers, but I think it's interesting. This says that some 57 to 64,000 books are published in the United States each year by one of more than 500 different publishing houses. Another 10 to 20,000 are self-published, which is very interesting that there are less self-published books than traditionally published books. I wouldn't have expected that, honestly. I would have expected there to be more self-published books at this point because there's just so many of them. There are at least 3 times as many books traditionally published than self-published in the United States, according to this, which is surprising. While the 5 largest publishers by definition acquire and sell the most titles, other publishers compete and win books of all kinds at all advanced levels, including best-selling books from prominent authors like J.K. Rowling, Michael Lewis, Dolly Parton, and Paul Krugman. In the aggregate, smaller publishers acquire more books than 1 or more of the big 5 every year, and they have been gaining share among consumers for years. That I also find interesting. I would have sort of been expecting the big 5 to be getting more of the shares. Entirely new publishers can easily enter as well. Established editors have left incumbent publishers to begin their own imprints, and investors have proven more than willing to finance new ventures from well-known editors. I think that's interesting. In the past 3 years, at least 3 new publishers, Astra, Spiegel and Graw, and Zando, have entered the market and have acquired books at all advanced levels. Zando and Spiegel and Graw have already published major bestsellers, redacted. But I think that's interesting. It's very interesting. I've heard a lot about the mass exodus from publishing houses, so I guess this is part of it. Except for a few books published each year by well-established or celebrity authors, it is impossible to predict with any certainty whether a given book will perform well. Fair. Okay, so this is talking about compensation for books when they acquire them, right? Usually includes, but often is not limited to, a percentage royalty on sales of the book, with a royalty advance individually negotiated and paid upfront. An author will earn out their advance if the book sells well enough to pay royalties exceeding the advance, in which case the author continues earning royalties. But acquisitions are more than just the advance, which I think is a big argument they're focusing on. Authors, through agents, negotiate other terms, such as the scope of the rights, allowing the author to profit elsewhere from excluded rights, higher royalty rates, accelerated payments, and other financial perks. Authors also may bet on themselves and forego an advance in favor of a profit-sharing arrangement that might provide higher upside payments, and monetary terms are only one part of the story. Authors also care about the relationship with the editor. They seek an editor who shares the author's vision for the book, and often an editor who will be a good partner for a long-term writing career. Because authors highly value the editor herself and their connection, it is not uncommon for an author to choose a publisher that has not offered the highest advance. That makes a lot of sense to me. I mean, if I am eventually in an auction and have an option, I feel like I would pick the editor that I think would give me the best long-term career, which may not be the highest advance. Like, if I think a company would give me, or a publisher would give me a high advance, but wouldn't necessarily have as big a chance of putting as much like marketing and resources into me, making my book have a lower chance of success, I think I would go with the one that I think would let my book be more successful, because that would be setting up a better long-term career. Another critical feature of the industry is that acquisitions are controlled by literary agents acting on authors' behalf. The agent determines the rules for each acquisition, decides which publishers may compete for each acquisition, and controls what information about bidding to share. When an author brings her agent a book, the agent uses her skill and expertise to determine how and to whom to pitch the book. Given each book's subjective nature, a good agent uses different tools for different books to serve her client's interest, which is interesting. And then it goes through and talks about agent tools being the acquisition format, how they can decide what the best format is for acquisition based off the book and stuff. So it talks about, I think, 3 sections. So the first one is exclusive submission, which is to a single publisher, and this could be because the author prefers to stay with the current editor, or because the agent uses their expertise and relationships to determine a particular editor that they think is likely to value the book most highly. In either case, the agent simply negotiates with that editor and or publisher to see if they can agree on terms. which I think is a good point to make, because if they're arguing that in auctions you would have lower bids against each other, that this high percentage of agents doing exclusive submissions, which I subscribe to the Publisher's Marketplace or whatever that is, and I get the deal updates, and it will say if it was an exclusive submission or if it was a bid. Like, it says that stuff a lot of the time. And there is a lot of exclusive submissions. So, and even when an agent chooses to submit a book more widely, i.e. to multiple editors at different publishers or different imprints within the same publisher, the book still may be acquired without any competitive bidding. An interested publisher can respond with a generous offer to preempt an auction. I see that a lot too. Or if the author is enthusiastic about working with a particular editor, usually based on a meeting between them to access the potential relationship, the agent can solicit a preempt offer. Which makes sense. If you really like a certain editor and want to work with them, you could just be like, give me a great offer and let's just go. I want to work with you. Either way, the agent and publisher negotiate deal terms one-on-one. In the minority of acquisitions involving multiple bidders, agents usually do not choose the kind of format common in other industries that use auction-type bidding. Agents typically use best bid auctions, either one round only or with a chance to improve the bid, where each interested publisher simply makes its maximum bid, or almost maximum if there will be a chance to improve, not knowing how many other bidders there are, who they might be, or how much their best is. Which is interesting. If you have watched Lindsay Puckett's videos, she has a whole video series on her book being acquired in auction, and it's very fascinating. Like, honestly, you should just go binge watch that entire thing right now, because it's really cool to hear how that worked. But from what I've heard, those auction type acquisitions are very rare, so it's very cool. Let's see. This is funny. The only shared feature of books in this price segment, talking about the $250,000 plus advance receiving books, is that at least one editor somewhere ultimately decided it was worth paying in advance of $250,000 or more for the book. A decision that includes not only that editor's subjective assessment of the book's likely success, but many other individualized factors affecting her valuation of the book. I think that's slightly funny. They're claiming that the evidence will show that publishers do not devote special production facilities to books acquired for advances of $250,000 or more. They are edited, printed, and distributed using the same people and instruments as all other books. I buy that, but I feel like marketing money is probably a little different. At least that's what I would think. This also says there is not a distinct set of authors selling only $250,000 plus books. So this is, as a hopeful author, this part is particularly interesting, because I feel like we all have this dream of getting a good book deal, and then once you get that good book deal, you've made it, right? And I've been increasingly seeing more and more stuff that just tells me that's not a thing, which is less sad. But let me read this. As noted above, industry participants do not apply common objective criteria to identify which authors to target as likely to receive advances of $250,000 or more. There are no separate publishers who target such authors, and no separate imprints or departments within publishers that cater separately to such authors. To be sure, some well-established or celebrity authors may predictably command large advances, but those advances vastly exceed $250,000. And apart from the most successful authors, repeat authors in general do not command predictable advances. I think that's an important one there. Apart from the most successful authors, repeat authors in general do not command predictable advances. Boo. Offers vary widely to debut and repeat authors alike. Even within the same publishing house, editors may submit drastically different bids on a book that eventually sells for $250,000 or more. Which is interesting. They make another statement here that it means only that the companies with the most capital tend to spend more money more often. Which, I mean, is an easy enough statement. Okay. A statement here about agents that's interesting. The inherent subjectivity of all books is partly why agents must intermediate. The agent best knows how to match a book with the potential acquirers who will value it most highly and structure an acquisition format for that will achieve maximum value for the author. But neither the agent nor the author typically knows how the negotiation will turn out, or whether any publisher will ultimately agree to pay in advance of $250,000 or more. And that makes sense. If it's so subjective, right, where if you were to ask every editor out there, right? Because you need to know the best editors at different publishing houses for a book. Like, so say you have a publishing house and you have 2 editors, right? If editor A isn't normally fond of your type of book and doesn't normally sell it a lot, and editor B is, you would expect a bid from those 2 editors to be very different. Like, this one who values that more would give you a higher bid than this one. And then this is further saying that, like, an agent has to know which editor will be willing to pay more money for it or offer more for it. Like, whether or not, preamps would be better, whether or not going to auction would be better, whether or not to have an exclusive submission would be better. Like, they have to look at all these vast options and pick the ones that they think will be the path that will provide the most value to their book, because it's not a subjective category of, this is a potential best-selling book that'll earn $250,000 plus advance. Like, there isn't just that default label on it where they could just go to anyone and anyone's going to be like, oh yeah, well that's an anticipated bestseller, take all my money, So I think that's a good, that makes sense as a statement to me. As to the few authors whose books easily can be identified as likely to garner high advances, e.g. a brand name author like John Grisham, or a star power public figure like Michelle Obama, they are among the most sought after sellers in the industry, and their advances vastly exceed $250,000. These authors have the most leverage against publishers, making them least likely to be targeted for a price decrease, which makes sense. I agree with these statements they're making are valid, and I mostly agree with them. I'm not sure if I think this is enough of an argument that I would think that there's not going to be any negative effects to authors. In short, the merger at most reduces the number of publishers that pose a meaningful competitive threat in any given acquisition from very many to still very many but one fewer. It's very sassy. There's a decent bit of sass in here, and I enjoy it. It's, of course, like, underneath of the legalese, but there is sass. Finally, the combined company will save real estate costs by reducing redundant properties and consolidating employees into existing PRH offices. Hopefully that doesn't mean reducing staff. I hope not for the publishing industry. They really don't need to be losing more people. Blah, 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 blah. Given the intensity of downstream competition, publishers always have strong incentives to use their gains to win more titles, especially those considered most likely to succeed. With greater net income, the combined company will not only offer higher advances, it will also bid on more books from more authors, an author benefit the government ignores entirely. A publisher's willingness to pay for any given book is largely a function of its expected revenues from sales of the book, minus the variable and operating costs associated with the book. For each potential acquisition, these revenue and cost factors are reflected in a profit and loss P&L projection prepared before the editor makes an offer for the book. When publisher income rises, because revenues are enhanced and costs are reduced, the projected profit margin on each book increases automatically, giving the editor room to offer a higher advance for a given book without diminishing the profit the publisher would have received pre-merger. That makes sense to me logically. I'm not sure if that's necessarily how it would work logistically. Like, if they had to compete more, I guess they would have the ability to do it, but I would think that if a company has the ability to make more money, they would keep it for themselves and not give it to authors. That's kind of gut feeling there. And that's mostly the interesting stuff from the Defendant's PreTrial Brief. I might end this here because I think this might already be a ton of information, but if not, I'm going to start going into articles on the case and some of the quotes I can find and some people talking about things that have been said and have happened. I haven't seen anywhere where I can read the full transcript of the trial, which is kind of sad. I was hoping to find that and I have not been able to. But I can do the next best thing and go through articles and find like the most interesting bits and link them below. My husband is calling me. I need to go, but I'll see you next time.